Are we in a housing bubble? Is 2008 going to repeat itself? These are questions that I get asked at some point by almost everyone that I work with, both buyers and sellers. So let's address them once and for all. I'm Angie Blanco, a realtor here in Miami, Florida with One Path Realty, and this question of whether we're in a housing bubble or not is an extremely intriguing topic that I can safely say everyone has thought about. Whether you think we are in one or we're not, you've thought about it. And if you clicked on this video, you're thinking about it right now. It's $1 million question, and just to be clear right from the start, no one has a crystal ball. But what we do have are statistics and data from previous years and of the current year to help us determine whether or not we're currently in a housing bubble. So I'll start with a really common comparison that I get a lot, and that is the comparison of today's inflated prices to those of 2006 and 7, right before the financial crisis and housing crash that happened in 2008. We think what goes up must come down, and if it happened then it'll happen again. And I can understand this thinking and why the average home buyer or seller would connect these two different times. In 2007, prices were tremendously inflated, and the same is true for today. Prices are high, buyers are paying over appraisal, sellers are asking for whatever they want, but there are still some key differences that play a huge role in determining if that's actually true and if history will be repeating itself. So let's get right into them. First thing, mortgage fraud. In the years leading up to what eventually was the housing bubble bursting, there was a lot of monkey business going on, like mortgage fraud. Buyers were being granted loans by banks without truly qualifying for them. Income wasn't being checked, credit scores, debts, tax returns, or even funds for a down payment. Basically, none of that was necessary. If a buyer had a pulse, they were qualifying for a loan. And not just any loan, but one that could essentially buy a $500,000 house, which also means a monthly mortgage payment of thousands of dollars. Now, when you actually qualify for a loan and end up purchasing a house in your real price range, having a reasonable monthly mortgage payment is difficult enough. But when you have an outrageously high monthly mortgage payment that you don't have the means to pay, then that's a recipe for disaster. And so sure enough, disaster happened.
Total disaster!
Today, banks work a little differently. They check a few more things, or a lot of more things, than they did back then. It's not so easy to qualify for a loan anymore. There are certain requirements that you need to have in order to get a loan, like sufficient income or qualifying income, a qualifying credit score, a reasonable debt ratio. You can't owe a whole bunch of things and then go out and take out another loan to owe one more thing, like a house. You need funds for your down payment and your closing costs, and all of these things are checked and verified before you're able to get that beautiful pre-approval letter that we all love so much. And so being that now banks are so rigorous and so selective in their lending standards, we know that the loans that are in fact being given out are for actually qualified buyers, not just warm bodies with a pulse, and this is a huge difference from what was happening before. In this graph, we can see how much tighter the lending standards got immediately after the crash of 2008. The difference is night and day. Second thing, a surplus of housing. In 2005 and 6 and the years leading up to the crash, there was an overabundance of homes for sale on the market. Everyone seemed to want to sell at the peak, and hey, I don't blame them. They were either cashing out on the upward trend or they just couldn't pay their mortgage because they couldn't afford it. They didn't qualify truly. And so they needed to get rid of these properties before going into foreclosure, which unfortunately, many of them still did. And so that being the case, that so many people were selling their homes for whatever the reason, whether they were trying to cash out on the upward trend or trying to avoid a foreclosure, there were a lot of homes for sale on the market. In fact, too many compared to the amount of buyer demand. And I'm not saying that there wasn't any buyer demand, because there was, but just not enough to balance out the excess of supply of available homes at the time. And as we know, if one thing becomes so readily available and there are just so many of it, then there's no scarcity around it and it becomes less valuable. And so a lot of these people who bought at super high prices could not resell at the same high price, because by that point, homes had already lost a lot of their value. Well, in today's market, the exact opposite is happening. There's currently an extreme shortage of homes for sale. There is scarcity, extreme scarcity. Take a look at this graph, for example. A healthy and balanced housing market has between 4 to 6 months of available housing supply. Well, during the crash, we see that there were between about 7 and almost 10 months of supply available. This is too much supply, and this is why we saw so many foreclosures and so many good deals come out to the market. This is what we're waiting for and hoping for today. Well, let's take a look at the graph again. For the past few years, the housing supply has consistently been under 4 months, and more recently under just 2 months of supply. This is a housing shortage. This is what causes what we're seeing today, which is a seller's market. There are too many buyers looking for homes and not enough of them for sale. How is real estate going to come down in price if there are bidding wars on every house that's listed? And how is a bubble going to pop if there's no actual bubble, but more so of a drought, so to speak? This is another huge difference that we have to consider when we start wondering if we're in another bubble and if another crash is likely. So how can we possibly turn this around? Well, at this point, we might bring up interest rates because they have gone up and they are said to continue to go up in hopes of exactly this, slowing down the market by having less people want to buy or qualify to buy. If we look at this graph, we can see that for the entirety of 2020, interest rates were on a decline. This was during the pandemic and done with the intention of increasing home purchases. In 2021, we can see that interest rates were just around the 3% mark for the majority of the year. But in 2022, this is when they began to shoot up, bringing us now to over a 5% interest rate and counting. In the short term, considering what interest rates were just a year ago, this looks like an unimaginable number. And to some buyers, it is. For some, this spike in interest rates was the defining line between whether they qualified to purchase or not. Because a higher interest rate means a higher mortgage payment, and if they don't qualify for a higher mortgage payment, then they would need to look at a lower price range of homes to compensate for this higher interest rate. But if there's nothing in that lower price range that works for them or that they like, well, then that's just a really unfortunate situation and they would probably be out of the market. But this unfortunate situation doesn't apply to all buyers. There are still the buyers with more flexible qualifications or stronger qualifications that aren't as affected by a higher interest rate. And also the cash buyers, which are not affected by the interest rates at all. So this spike, yes, to a degree, will very likely slow down the market, but will it cause a crash? In my opinion, I highly doubt it. But what do you guys think? There's also one more thing about interest rates that I want to mention, and it is that if we look farther back on this chart, we'll see that in the grander scheme of things, interest rates might actually not be as high as we think they are compared to where they've been. In 1981, they hit a high of 18.53%. In 2000, they were 8.62%, and since then, they've been at around an average of about 6%. So yes, they are higher now than the 3% that we were so comfortable with, but looking at where they've been, 5 to 6% is not an inconceivable number. And knowing this might change a buyer's perspective and decision on whether or not they want to buy today, because it might be that they'll never see such low interest rates again, or maybe just not for many, many years. And by that point, who knows how much higher home prices will be.
Probably by quite a lot.
And the last point I want to touch on in this video is regarding the inflated prices and if they'll be coming down. Now, we're speculating a little bit here, but if we look at the data, which is 1, buyers are truly qualifying for loans today. They can actually afford the homes that they're getting. 2, yes, the interest rates are higher today than they were last year, but that was the lowest that they have ever been. And it was done because there was a worldwide epidemic going on. So it's not very likely that they'll ever be coming down that low again, or at least not for many, many years, which means that today's rates are pretty normal. In fact, they're probably lower than they would have been if our world wasn't turned upside down in 2020. And 3, there just aren't enough homes for sale to balance out the overwhelming buyer demand. And for that to even out, for there to be enough homes for sale in the market to stabilize the demand, combined with the slowdown in construction, it could very well take years for that to happen. So with this being said, I personally don't think prices will be coming down. However, I do think it's possible to see them plateauing, since we'll likely see a slight slowdown in the market because of the buyers that can no longer purchase or the ones that just choose not to for whatever the reason. But this is my take on the topic, and I'm curious to know what you all think about it. Do you agree with me? Don't you? I know that this is a very opinion-heavy subject, so I'd love to hear your views and perspectives. All my information is down in the description. I would love to connect with you. And if you like this video and are still considering purchasing, then watch this other video here where I go through 7 questions to ask yourself before buying a house. You got to make sure you're ready no matter what the market is doing. Happy watching, and I will see you on the next one.